In this lecture, I will address socio-economic benefits of futures contract, also termed as role of futures contract in socio-economic development, which is an important lecture over futures contract, and which is a sixth lecture in the series of lecture on futures contract. After hearing to all about futures contract, an interesting question would be in everyone's minds: why do futures contract exist? Why should we trade in that? How we differentiate than other contracts? Do they serve any useful purpose? Are are they merely gambling instruments that have created speculation based on price volatility? And too many questions we do have in our mind. So futures market exists for several reasons. So if we keep on looking into the futures contract, how it is useful to the mass of investors, you will understand that benefits of futures contract. So firstly, futures contract are contain information of prices. The very basic function of derivatives contracts are price discovery. From discovering price, that the investor will have a direction for taking too many decisions. So just because futures prices contain information regarding prices, commodity producers and consumers can get to know what the future spot price will be in the future and what future supply and demand of a good will be. By observing the current futures price, this would help them to make a better production and storage decision. In that purpose, futures contract is very helpful for the investor for their economic benefit. Okay, which contains price information already. From this price information, you can predict how much you need to produce and the amount of storage you need to keep in your godown. One more benefit of futures contract is which gives more accurate price estimation compared to any other thing, which gives more accurate price estimation. In the sense, the economic benefits of having a more accurate price estimate in advance are very well known. You already very well known. More accurate price estimates result in a superior allocation of the resources. You can make a optimum allocate of your resources. Maybe both producers or consumers for their better decision about how much commodity to produce, which to consume, how much to produce and consume in the present versus in the future. For too many decisions, the allocation of resources is very important, because futures contract make a very accurate price estimation. From these estimation, all these are possible. One more economic benefit of futures contract is futures make transaction across time easier, which means due to it is standardized contracts, you can make a low cost agreement from the futures transaction. Just because futures make a transaction across time very easier, that they allow firms and individuals to quickly create a low cost agreements, just because to exchange money for the goods at a future times, and the transaction cost of trading futures are minimal relative to the rupee amount of commodity underlying most contracts. So from futures contract, the agreements are becoming easier and less costly compared to any other things. In the futures, you can make a hedge against undesirable price changes in your investment. In the sense, futures allow business and individuals to hedge against undesirable price changes, so that genuine producers and a use of commodities need not bother about unexpected price volatility. So you can concentrate on doing what they can do best. Okay, you are not going to worry about the volatility of the market. They can transfer price risk to the speculators and concentrate on doing what they do best and produce use. Another economic benefit of futures contract is you will deposit only fraction of the contract amount with the broker. As I given in the example, earlier example, while I am briefing about margin, where you about futures contract and cash market and futures market. In the futures market you deposit only 11% as margin over 2 lakh, whereas in the cash market whole 2 lakh you will invest. So only you are going to invest margin amount with the broker. In the sense, you are going to deposit a fraction but taking full advantage. Okay, you are taking full advantage. It is due to standardization. This is a very important the advantage to the investor, because they are not going to invest whole the amount. Example, you bought a value of 1 lakh, so then you are not going to invest whole 1 lakh rupees, whereas you are going to invest the prescribed margin rate. Example, 11% is prescribed in NSE. Only you are going to invest 11%, which means 11,000. But you bought a value of 1 lakh rupees. You are going to invest only 11,000. Okay, and the gain also same thing. So this is how the futures contract will work. So long as futures are used for a genuine hedging purpose, there are no risk in the futures contract. The potential risk arise mainly out of excess of use futures for speculative gains. Even though speculatives are also available in the futures contract, so the excessive risk only will come when you are in the speculative gains. And there are living example of financial debacle suffering by companies like Procter and Gamble, Kashima Oil Company, Orange Country and other, mainly due to the use of futures market for the purpose of other than genuine hedging. Okay, if you are for a genuine hedging, there is no issue in this. So these are very important socio-economic benefits, a role of futures market in an economy. Thank you so much for watching this video.